ACCA June 2025 SBL Exam Dearn Shoes SWOT Analysis Threats. Economy in Lucland is slowing down. GDP growth is down to 1.1% from 5.1% 5 years ago. And in the next year, it's projected to be 0.8%. This is going to be a problem for all shoe retailers, but it's going to be an even bigger problem for Dearn. Why? Because Dearn is a medium price point shoe retailer. And in line with the economic slowdown, the proportion of mid-price shoes sold has been falling and the proportion of low-price shoes has been increasing, meaning that Dearn is going to be in increasing competition with low-price shoe retailers such as Flamingo. Growing consumer concern over environmental impact and ethics of outsourced production is another threat for the industry. The shoe industry was responsible for 1.4% of the global greenhouse gas emissions in the previous year, and hundreds of thousands of shoes are disposed each year, filling up landfills. Also, there is increasing awareness that employment protection legislation is poor in the countries of third-party manufacturers that Lucland shoe brands are outsourcing. Dearn Shoes is outsourcing 3 out of 4 types of shoes they are producing to EXCO in Scotland. So if EXCO was producing under poor working conditions and people learned that in Lucland, that would be a big problem for Dearn Shoes. Dearn is also facing a threat to lose their market share to more agile competitors like Flamingo and VRIO. Flamingo is basically Zara of Lucland shoe market, and VRIO is the market leader for casual shoes and has strong brand loyalty among their consumer base, which are young adults between 18 to 30-year-old. And Dearn is really struggling with that customer segment. Everything we have discussed until now shows us that Dearn is going to face increasing competition. And if they want to survive in this increasingly competitive market, they are going to need to make some strategic changes. However, Dearn's top-down functional structure and high level of hierarchy does not support change. Their risk-averse culture does not enable innovation and change. So they will need to start changing by their culture if they want to make a strategic change.